What's going on, everybody? It's your boy, Mr. Banks, coming at you with episode 4 of daily live trade recaps of live trades that are taken each and every day. Now, today I'm going to be going over demand again and going over our AMD trade that we took in the open. So, hopefully, you guys get a better idea of how to take these trades and help make you a better profitable trader. But first, go ahead and hit that like and subscribe button so you don't miss any of this daily education I try to put out on a daily basis to make you profitable. Let's get right into it, guys. As you guys know, we do take, or these trade recaps are based off of real trades that we are taking in the Roosevelt Discord. AMD trade that we took in the morning. Why did I take it? Well, you'll start to see as you watch these trade recaps, episode 1, 2, 3, 4, up until over 1,000. Hopefully I get to kind of the same concepts, right? It's not Nothing really changes per trade. There are going to be a couple things that change on different trades, but overall, it's still going to be the same thing. Are we in a supply? Are we in a demand? Are we holding a certain level? If we are we breaking a certain level, right? All these things are going to essentially be the same. I don't necessarily change my trading each and every trade. It's all very simple basis of supply, demand, where we are in the chart. Are we holding a level? Are we breaking a level? And that's really all it comes down to. So in the morning, you know, where did AMD bounce off of, right? Where did we come off of? Where did we bounce off of? Well, if we look left, we can see that pretty big area of demand here, right? Pretty big area of demand. We have between 158 to 160, right? Kind of this area in demand, pretty heavy. We could see that around this 158 level is where we shot up to highs here to 185. We came down, retested the higher low, shot up again, higher low here at 160, 161, and that led us to the all-time highs there. And now we're just coming back to retesting this demand. Now it gets a little bit tricky, especially since we are in a bearish downtrend. Are we going to bounce in these zones? Are we not going to bounce in these zones? But this is a pretty big zone. You can see on the 4 hour, pretty big level that we need to hold here between 158 and 160. Below, we can get into that 155 area. And, we'll come back down to this 150 area if we continue to sell. But you have to expect that buyers will step up within this demand. And that is exactly what we did today. Now, I didn't take the trade right off of the level, right? I didn't take the trade right off of that level that we have, but I waited a little bit for just a little more confirmation, right? I wanted just a tiny bit more confirmation before I took this. Why? Because yes, we are in a bearish trend. We just broke this kind of balance that we had to the downside. Are we going to continue down? Possible bear flag to head lower, right? Markets were weak today. So that was my thought was, let me wait for a little bit confirmation before I actually enter into this trade. We can see on the 5 minute here, we came down in putting a big wick down. Now whoever has watched my videos before know what we're looking at when we're coming to price action, right? Price action is just this candlesticks. What is going on between buyers and sellers? That is price action. What are we seeing here? Coming down into a major demand level, major demand zone, huge wick down. So what is this telling me? Yes, sellers were there in the morning. Obviously we sold off later, but that's irrelevant for this trade. Sellers were there in the morning. We came down into our level. We held. Buyers bought this all the way up, right? Putting in a massive wick down and reclaiming one of my levels here at that 161 level, right? So you guys go back to the 4 hour here. You can see, nothing has changed here. That 160.87, 159.25, going to be the same levels that we're trading here. 159.25, 160.87, right? Same exact levels. So lesson, always look at the higher time frames. Those hourly levels are going to hold more weight than these intraday levels. Now, pre-market low, pre-market high, yesterday's high, yesterday's low, opening print, all hold pretty good value. I mean, we can see right here, yesterday's low, after hours where we gapped up, right? Also held midday as well, pretty big level there. But the hourly levels, right, are going to be hold a lot of weight. So you can see exactly in this example, we bounced right off of that lower level, 159, came up to 161, we hold. One thing I would like for everyone to do is constantly be flipping between time frames, right? From the hourly, 4 hour, daily. Now, in the opening range, this is gonna, not play a part so much. We have our hourly time frame levels already marked for us. But while we're in the trade, especially in the opening range or the opening print, um, right, the smaller time frames are going to give you a little bit more um weight to the actual trade that you're in. Why? Because the hourly is just starting to form, 4 hours just starting to form, 30 minute, right? Everything's just starting to form. So we kind of need a little bit more picture to the story when it comes to trading. So I kind of went down to the 3 minute, went down to the 2 minute. Let's take a look at this difference and where I took the trade. So I took the trade right here. If we look at the 5 minute, look at the 5 minute, right? 5 minute tells the same story. We came up, we held this level, we pushed up. Now we could have had a bear flag here. We could have had a bear flag here on the 5 minute. So a little bit risky if we're only looking at the 5 minute. Now this candle right here, uh, putting a wick down, pushing up, right? This would have been a nice entry if we're just looking at the 5 minute. But I was looking at the 3, I was looking at the 2 minute, and that kind of gave me that gauge to take this just a little bit early. Why? Because you could see within these two candles, this is where the 5 minute candle would have which is where the 5 minute candle formed. We pushed up and we pushed right back down into our level and had another hammer candle to the upside. Um, so if we're just looking at the 5 minute, kind of want to make this a point in this video of using different time frames, use especially the smaller time frames in the opening 30 minutes. We could see that this 5 minute, right? Yeah, we're seeing a hold of that 161 level. We're seeing a push up, but this could have easily turned into a bear flag push down. But if we come now down to that 2 minute time frame, it gives us a little bit better story, right? Of to go off of. And especially within that, the first 30 minutes of volatility, we kind of got to be quick. We got to think on our feet. We kind of have to have, it's that confluence. And how do we do that? By going down to these smaller time frames to kind of get that better picture of what's going on. So in that 5 minute time frame, we saw just a candle hold and push up. But on this 2 minute, we saw that we pushed up. Sellers try to bring us right back down into our 161 level. What happened? Buyers pushed us all the way back up. We held, and then we started to pushing right back up into this nice and balanced fill right here at open, the pre-market high. Point is, use the smaller time frames, gave me that better picture. You can see that difference between that 5 minute candle, which was a straight up here, whereas a 2 minute showed us that sellers did try to bring us down within that 5 minute candle. They pushed us right back up, giving me that confidence to go long. Another one is this NVIDIA trade. NVIDIA was absolutely pushing this morning, and typically, but not always, if NVIDIA is pushing, good chance that AMD can follow, right? There is a pretty good chance that AMD follows whatever NVIDIA is doing. And that is exactly what happened today. So recap, higher time frames for our levels in the morning volatility. Throughout the entire day, always be looking through all the different time frames, 5 minute, 10 minute, 15 minute. But when we're in that first 15 to 30 minutes, we haven't had a single 30-minute candle form. We haven't had an hour candle form, 4 hour candle form, right? They're just starting to form. So they can't really give you a huge bias to what's going to play out like they can more in the afternoon trades or after that morning volatility. So in that case, that is where I like to go down to the smaller time frames, like the 2 minute, the 3 minute, while I'm looking at the 5 minute to kind of give me a little bit better picture since I can't fully use those higher time frame candles within that first 15 and 30 minutes. Have any questions, guys? Drop them in the chat. I'll see you around for episode 5. Again, I believe in all of you. Keep working hard. You can make this happen just as I have. So thank you guys for showing up. Again, my name is Mr. Banks. Love you guys. I'll see you guys on the next trade recap.